Hey guys, this is the market update. Massive moves in crypto over the last 24 hours. Bitcoin, Ether pumping. Most other altcoins are pumping as well. Why is that, considering the economic data is coming out quite weak? I'm going to go through that in this video. You can see I've got tons of data here that we're going to look at to show why Bitcoin and crypto may actually start pumping here and potentially reversing the downtrend that we've had for the last almost 12 months. You can see these massive areas of resistance in the downtrend, and we are actually trying to break through this now, potentially for the first time breaking this very long-term downtrend. So I'm going to talk about that in this video. I'll leave timestamps down in the description as well for each of the different sections. Coming first to the Bitcoin chart then, what we can see after a massive period of consolidation right here is finally a potential breakthrough of this very long-term trend. This is the first time we've had the breakthrough of this, so that's looking very good. Now, why on earth is Bitcoin potentially starting to pump, even though economic data is starting to actually turn for the worse? Surely a worsening economy means bad news for Bitcoin. Well, yes, and that is what has been priced in the whole time over the last 12 months. Of course, Bitcoin tries to predict what will happen in the future. It tries to price in the market, the economy, interest rates, and money supply in the future, 6 to 12 months out. And finally, we're getting data, economic data that is showing the economy is weakening. And that is exactly what the Fed has been trying to do, raising rates. And so when the data is coming through that potentially we are seeing that happen, the market now shifts and says, if this is starting to happen now, then each next bit of data is going to get worse and worse because the data is backward looking, of course, and that would potentially mean that the Fed doesn't have to do more. And if the Fed doesn't have to do more, then you can get back to a period of normality where markets can actually try and price in some sort of growth in the future out of the recession that has been being priced in over the last 12 months. Also, if you are a crypto trader, check out the deposit bonuses over on BitGet. They're giving up to $8,000 as a deposit bonus in your futures trading account. So if you do trade crypto futures, that bonus is there. The other bonus is down in the description as well. There are two sides to this data, of course. The first one is, oh, inflation is going to start coming down. That's good. The second part of it, well, if this is happening, if we're getting a massive destruction in demand, are we going to tip too far the other way? And then that potentially isn't good for markets as well. So even though short term, I'm actually fairly confident about taking risk here in the markets and going long, we have to worry maybe for the medium term about how big a potential, downsizing of the economy and destruction of demand will be. But right now, this is what the Fed wants to see, which is why I think you're seeing people saying, well, if the Fed are going to ease off, then maybe we can take a little bit more risk. As you can see here as well, US manufacturing PMI from S&P, which is the blue line here, falling below 50. That is a market contraction. Anything above 50 means the economy overall is growing, either from manufacturing or services. There are two different ones. And anything under 50 is a contraction. We're right here now. Now, once the economy is in contraction, the Fed and central banks, they do not want a recession. They do not want deflation in prices. And so when you start seeing these figures come out showing we're in a recession, the market itself starts to think, hold on, they're going to actually start flipping their policy. Now, I don't think the Fed has flipped here. I don't think we can get ahead of ourselves. I think there's probably still 3, 4, 5 months of rates going up and staying at a level, which is what the Fed said. But the market is always trying to front run this. Ever so slight rolling over in Fed funds rate expectations, as you can see here. A huge reduction in house prices month for month, reductions in the prices of houses, actually almost the worst since 2008-9. So that shows you the demand destruction that has gone on here. And actually for inflation, inflation's not going to be here in 6 months' time. We can see this is coming through now. So that's why the market has to look forward and say, if demand is coming down this much, what is the Fed going to have to do? Actually start to cut rates. And I don't want to get into that speak. We're nowhere near that yet, but that could be potentially being priced in right now, especially as interest rates are coming down, a technical bounce in risk assets. Something really interesting as well is the narrative changing. And I think that, when the Fed's narrative changes, you have to listen. Remember last Friday when they actually came out, they leaked a report through the Financial Times saying, basically, look, don't push rates higher than this. We think they're high enough. We want them to be high, but they were starting to get out of control, and the Fed was saying, hey, look, don't push them higher than this. If they're saying this, that's where the market can actually say that's a potential level that we can take risk at. And also Janet Yellen from the Treasury coming out and saying they were worried about certain parts of the Treasury market becoming illiquid. When they put these things out and they're worried about this, what this says is, we will maybe step in at these levels. And so again, you're just seeing this technical bounce. That's why I said in the last few videos, are actually quite comfortable taking risk at these levels. 2 weeks ago, Chair Sherrod Brown told Kate Davidson, I don't have a lot of thoughts on what the Fed does. That changed today. Brown sent a letter to Fed Chair Jay Powell urging the banker not to crush the labor market as rates rise. As you can see, currency strength chart, the weakest was the USD. And this is another technical reason why you'll get a bounce here in Bitcoin and risk assets generally. As the US dollar weakens, it's just a technical bounce in risk assets. So the US dollar, why is the US dollar weakening? You're finally seeing some weakness, which is what the Fed wants in the housing market. And that will obviously feed through to potential inflation coming down as well. So that's exactly what the Fed wants to see. And once that happens, then we can get back to some sort of normality and actually, looking for growth again. That's probably way into next year. They are still going to raise by 75 basis points and then probably 50 and then 25 and hold them there for a little bit. But we are coming towards the end of the rate hike cycle. And so when inflation starts coming down and demand starts coming down, then you obviously want to see the Fed actually supporting growth again to make sure that a huge recession doesn't occur. Something I was talking about in the private groups as well a few days ago as part of the crypto investor course is the revenue for American companies starting to come off. This again shows us some demand destruction. As you can see, this is Alphabet's figures right here, and you can see the revenue missed. Now, when revenue is starting to miss, that shows that demand destruction is taking place within the economy in a very general sense. And so again, this is just more data that is showing us that demand destruction is taking place, a slowing of the economy is taking place, and this is going to feed through to potentially lower inflation. And so still inflation is way too high. The Fed is still going to be raising rates, but the market is pricing in differentials now, in 6 months' time. That's what the market does. Something on the downside here that I definitely want to kind of talk about as well is that for stocks, there could be potential downside here as revenue is missing, as earnings are going to start missing, as potentially this recession coming may be quite large. We don't really know how big it's going to be. There is definitely some room for stocks to come down a bit further because stocks are valued on their earnings and that's it. Now they're also valued, especially tech stocks, on the price of money going forward and the discount rates that are used to actually value these things. And so again, if rates are coming down, that may, or if the market expects rates to start to actually stagnate or come down, then that may cushion the blow a little bit. Now that isn't the case for Bitcoin and crypto though, because Bitcoin and crypto, especially Bitcoin, doesn't have any earnings. Now, other cryptos do have potential earnings, but Bitcoin trades off rates and the money supply way more than earnings. So that's why you'd see these bounces in crypto being far out on the risk curve and being much more sensitive to interest rates. So I want to finish off with 3 charts here just to show you the uptrend that has now been occurring for the last few months. This is the ETH chart right here, a very clear uptrend, as you can see, a very clear trend forming with higher lows and probably a resistance level around the 1600 level to get through. Let's see if it actually breaks through that, or we could actually just come and trend here. It really depends what the data says and how the market is going. But I want to look at Matic as well. Matic is definitely hitting a uptrend as well. You can see this uptrend very clearly. So another very clear uptrend in Matic. So these cryptos are growing and bringing on users and growing as networks. And so from the bottom here, which was 36, it's now way higher. We're looking at a potential breakthrough here as well. So another very bullish chart. Even BNB coin here, as you can see, another uptrend, certain uptrend with higher lows here. Very, very strong chart as well for this altcoin. So that's showing you that these networks that are growing are finding that potentially the market environment is a little bit more positive for them in terms of interest rates. And they are definitely pricing this in right now, looking for these 3 altcoins really to break through potential resistance. So these are fairly bullish charts, and we'll have to get the CPI data in. And if that is starting to come down, then you may see these cryptos do really well because, again, what they're trading on more than anything else is interest rates. They're right out on the end of the curve. And so they start pricing in the depression first, but they also can potentially come out of that first as well, where some of the other stocks that you'll get in the S&P may have a hard time over the next few months as that recession kicks in. So, it's all about pricing of these assets in relation to yields, especially with crypto, which is, much more sensitive to interest rates. Check out the BitGet deposit bonus in the description, up to $8,000 in your futures trading account. Really good bonus. Other bonuses down in the description as well. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.